Hey there, if you follow us here at 5Market Realty, we like to do real estate updates on the Athens area real estate market, giving you information about what we see in the market, home prices, home sales, overall activity, but we also do market reports that are more on a national level. And this month here in May, we actually had some information because we feel like there might be a little bit of a tilt in a different direction happening in our market, and it was a good time to kind of get some national news out to you. So if you're interested in real estate, Athens area real estate, be sure to click subscribe. You'll be notified when we have a new market update video. We also have videos on basically listings that we have and various things like that. So again, my name is Scott Talley. I'm the broker here at 5Market, and today we're going to go through some information talking about a little bit about foreclosures, what we're seeing in the market nationally, home prices, and talks of a recession. So one, is the market stabilizing? We're seeing some trends now that kind of feel a little different than what's projected as we were in the summer last year. And then what does a recession mean for real estate? We're going to talk about that because we've talked about it before, but there's going to be a lot more recession talk probably in the coming months than there's been. On a quarterly basis, home prices rose a seasonally adjusted 1% in the Q1 2023. The fact that prices rose slightly in the first quarter is evidence of significant pent-up mortgage demand despite ongoing affordability constraints. That is Doug Duncan, the senior vice president or an economist at Fannie Mae. So that's nationally what we saw in the first quarter, a 1% rise. And the same thing's going on here in Athens and the Oconee area. As we got into the spring market, we've started to see prices not go down for the most part. They're still going up. Now, that's house to house. Some houses are overpriced, but for the most part, prices are still going up despite the interest rates. Now, home value declines, have they stabilized? It's starting to feel like they may have. So let's look here at Case-Shiller, FHFA, and CoreLogic. As you can see, this is January 2022. Once we started to have those interest rate hikes go up fast, July through December, and really January, small decreases in overall prices nationally. And then here in February and January, as you can see, that trend started to change. We saw it change here locally in March. We saw it in April, and I expect we're going to see it again here in May. So it's starting to feel like this was the decline. That was the lull, unless these interest rates have to jump up again. But there's some things going on that were kind of stabilizing our interest rate climate. Here's a quote from Andy Walden. Just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis in 92% of U.S. major cities. 92% of the U.S. cities had price declines. Fast forward to March, and the situation has done a complete 180, with prices now rising in 92% of the markets from February. So during that end of the year, into the beginning, we saw most cities see a small decline. Now we're reversing that trend in the spring market. So it's starting to feel like we might have already bore the brunt of the reel back in a lot of these prices that some areas we're seeing. Not as much here in Athens, but we have seen some major change in the Fannie Mae forecast. This is about a price decline that was forecasted. Some people like Ivy Zellman called for more as we headed into the year. In March, they were calling for a national decline of 4%, and it's already down to 1%. Because of the resiliency of this market and the low supply of homes, we're probably going to see a lot of changes in the forecast. I know here locally, we're not really seeing prices come down. I'm going to talk briefly about inventory and foreclosure update because there are things in the news still talking about foreclosures going up. We've talked this to death, I feel like, so I don't want to spend too much time on it. But folks, foreclosures are going to go up because for a while there were no foreclosures. So here's some examples. This is an Adam report of U.S. foreclosure activity continues to climb in Q1. Here's some more clickbait for you for last month. Bloomberg, more Americans are losing their homes and foreclosures on U.S. properties rise. Foreclosures are on the rise, says CBS News. They sure are, because there was one time there were none. U.S. foreclosure filings up 22%. Repossessions hit highest level in 3 years. Foreclosures jump is another wave about to flood the housing market from Realtor.com. There's a lot of this out there, but you really need to understand the real news. Foreclosures are up. It's factually true, but we're still drastically far behind a norm. So let's look here. U.S. properties with foreclosure filings last 3 years. 2020, we were short 380,000, 440,000 plus short in 2021, and then 320,000 short in 2022. Average being almost 600,000 foreclosures. So while the foreclosures are up, we are still way behind, and there will be foreclosures. A recession that could happen might create some foreclosures, but it would have to be significantly higher to get us to something that happened before 2010. As you can see right here, the amount of foreclosures in 2009, 10, 11. And then this is where we've been since really 2020, and even way down here. If we were at 400,000, still drastically below anything normal. So foreclosures are up, but don't expect foreclosures to change the housing market. That's not what we're projecting to see. Now, this is a summary of the Fed meeting in March of 2023. Given their assessment of the potential economic effects of the recent banking sector developments, as you know, a few banks have failed, the staff's projection at the time of March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. So there you go, recession. 5 minutes in, and now we're talking about recession, and you're going to hear a lot more about it in the news. People in our industry have been in a recession for a year because of the transactions are down. Mortgage bankers have less loans. Realtors have less homes to sell. It's a gridlock style market that's also causing the prices to go up. So now the recession might start to show in other sectors of the economy. What is a recession? Well, let's define it. The National Bureau of Economic Research, here we are. What is a recession? A significant decline in economic activity spread across the economy lasting more than a few months. Normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. So there's an old saying that real estate is the first one in a recession and the first one out. In our industry, what I refer to as recession is not prices declining, it's the amount of transactions. That creates a recession when there's less home sales, less inspections, less painters, less all kind of work going on when there's less transactions in the market. Now, how would housing be impacted by a recession? We've talked about this in the past, and we'll go back to it, but bank rates subs it up pretty good. During a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It also typically leads to more affordable mortgage rates, which leads to more opportunity for home buyers. Traditionally, that has been true. Let's look at this now. A recession does not mean falling prices. So as I move my head out of the way, home price change during the last 6 recessions. We've shown this to you a lot. 2008, as you can see, was the one time that we saw a big falling price in a recession. Other times, the prices actually went up. 1980, 81, 2001, and of course, 2020. We all know what happened here. That was the foreclosure crisis, mortgage crisis, which we just went over a minute ago. Recession means falling mortgage rates. Look at what happened in 1980, down 4.2%. More recently, you saw a mild come down in 2001, 2008, and of course, a whole point in 2020. So there is a little hope that that might be a pro for a recession for people to be able to get a better interest rate. Obviously, nobody's really pulling for a recession. There's a lot of pain when that happens. Current rate on existing mortgages. And this is where I want to end and talk about a part of this market that most people aren't really thinking about. So when we want to talk foreclosures, we want to talk housing. We're actually in a really good, stable housing situation for people that own their homes. Let's look at these numbers real quick. 23.6% currently of existing mortgages have a rate below 3%. 38.5% have a rate between 3 and 4%, and 20% have a rate between 4 and 5%. So right now, with rates hovering about 6%, let's call it that, right, as we're here in May, there are so many people in a good housing situation with their rate. And if they're not looking to move and they are having some economic troubles, they're probably going to fight very hard to keep that payment. So these are good things. It's also the negative as people are not incentivized to sell, keeping our supply low. This is another really big thing to see. Americans sitting on tremendous equity. 67.6% have paid off their mortgage or have at least 50% equity. Let's look at this blue number. Blue, 28.9%, mortgaged homes with greater than 50% equity. That means almost 30% of the mortgaged homes in America have greater than 50% of equity in their house. That's tremendous. And then if we look here at the green, 38.7%, 38.7% of Americans own their home free and clear. That's amazing to me. This is from a census at Attn, and that's just tremendous. And then 32.4% have mortgaged homes with less than 50% equity. So basically 32% with less than 50% equity, that's what we're talking about. And mortgaged homes with greater than 50% equity at 30%. So we're actually sitting on a really, really unique market. So that has housing positioned well even with the rates. It's just more frustrating if you're a buyer right now because you wanted to see the prices come down and the prices don't appear to be coming down. So as we end here, we'd like to give you a shot of our team here at 5Market Realty. You can reach out to one of our agents to get connected, to start any help you need. If it's looking to sell, looking to buy. One of the things we will end on is I will give you some advice. There's been a lot of people trying to time this market. When the rates started to go up, people started to say, oh, well, here comes the crash. Or, and then the crash didn't really happen. So now we've seen some of the buyers we work with, they try to get back in the market. And now they're frustrated because the interest rates have not come down. And we want to see that too. What we're learning here is in the supply and demand market, if you're waiting for something to happen, it could actually cost you money. So if the rate is not great right now, but you need a housing situation, I wouldn't hesitate. If you're good and stable in your home, stay there. But if you need to buy something, you need to go ahead and act, because right now waiting is actually costing money. And then when the rates hopefully do come down at some point in the near future, hopefully you'll have a chance to refi. But in the meantime, if you need help, reach out to one of our agents, info@5M Realty. That's our number below. Be sure to click subscribe. Thanks for sticking with me for almost 10 minutes. And we'll just keep you up to date on what we see as the market continues to move forward here in 2023. Happy Mother's Day to everybody out there, as you're probably seeing this on Monday.